Hey guys, this is Tyler with Socrates Trading and Investments. And I want to briefly outline here for everyone why you guys can start growing an account exceptionally fast with this change in PDT rule. So, anyone here who doesn't know what's happening right now is that FINRA, which is the major financial body in the US, in conjunction with the SEC, is changing a major regulation that's the stupid policy, as I call it, of the stock market. What happened is around 2000, there was the big market crash when all these well known tech stocks, the tech bubble just absolutely exploded in the mid to late 90s into early 2000s. And then guess what happened? This tech bubble ended up reversing, and a lot of folks lost a lot of money. What then followed is that the SEC and FINRA enacted this policy around 2001 that made it so day traders, investors, whatever you want to call them, people putting money in the stock market would need to have $25,000 to make unlimited number of round trip trades in the market on any given market day. It's absolutely asinine. When you understand the mechanisms and how the stock market works, anyone here who has any real understanding and knowledge of day trading, this 25,000 is a very arbitrary number. But as we know, the US government loves coming up with arbitrary numbers, whether it be the drinking age or what age people can drive or whatever it is, smoke cigarettes, you name it. And they did the same thing with the stock market. When you think of it too, imagine this was like in 2001. So 25,000 was even a lot more then. 25,000 then would have been maybe like 40,000 plus 50,000 now in current dollars. The number of retail investors slash traders that would have had the money to hop in with this amount of money so they could actually day trade completely was very small, unfortunately. What it actually did is it restricted and it limited greatly the number of people that could get into the market and understand how to day trade. There's a lot of statistics behind day trading and probability rates and like the win-loss ratios. What it takes to be a successful trader is a ratio that's not as extreme as people often think, meaning that their losers are kept just a little smaller than their winners. That's really all it boils down to. And then you just need a ratio that's a little more favorable with the winners. Now, what's currently happening, so let's fast track. Last year, it was a combination of the FINRA, SEC, Donald Trump. There were a lot of players here, probably brokerage houses like Charles Schwab, Fidelity. These companies and everyone else came together and realized there were a lot of retail traders that wanted to actually day trade that were losing out. The companies could make a lot more money, a lot more commissions, and there could be a lot more liquidity in the market, especially on small to mid cap stocks. They greatly reduced the amount required. Now it's like $2,000, which is incredible. This new law is going to be going into an effect in the next month or 2 months. It was passed last September, I think, and then it just needs to clear another. I can't remember if it was FINRA or SEC, but once it clears the second phase, it will then be permissible for all these companies like Charles Schwab, Fidelity, Ameritrade. So people with just 2,000 can day trade. There's no cap, because what was the situation before? You could only trade with a cash account or a margin account if you were under the 25,000. So for example, with like the cash account, if you had say $10,000 cash account, you could make $10,000 worth of round trip trades in the market. So if you were making or executing $2,000 trades, it would be five $2,000 round trip trades. and then it was done. You couldn't make any more trades for that day. You could trade up to the amount of funds that you had round trip. Like I said, that really hurt a lot of people, especially people that were under like 5, 10,000, especially people under 2,000, because the mechanics of the market work. It's very much a system of probability. And for a beginner or novice, you can't really learn and refine and master that system if you're limited by this trading up. People now, a lot of newer traders and people that have been in will be able to trade freely, can make as many trades as possible. And unlike, say, some of the offshore companies, they won't be restricted by high commission fee structure. You'll still have pretty modest fees, and it's a great opportunity. A lot of teenagers and people in their early 20s can get in and see if it's for them. Even still, a lot of people won't do very well. They might think, oh, yeah, there's going to be like so many minted millionaires made. No, actually, probably not. You still need to understand the system, the mechanics, level 2 data, scaling in, scaling out, how graphs and charts move, the patterns and fast speed and things that take a lot of time to refine. All these different skill sets that are part of day trading. There's going to be great opportunities, like I said, with more liquidity in some stocks, because you're going to have a lot more of these people with sub $10,000 accounts jumping in and out of these stocks on a much larger scale than you would have had when most people were restricted. Now, keep in mind, yeah, this PDT rule, it only existed in the US. Even Canadian traders didn't have to deal with this, and people in Europe or any other said country don't really have to deal with this. But look at the market participation from the US, it's a very sizable percentage. And so it became quite significant here. This is a great time to hop into the market, and give me your feedback below. What's your ideals on this? Thank you.